Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, June 12th, 2013. Well, the candle we're analysing is this second last candle on the chart that has finalised trading for today. The last candle here is still currently trading, so we can't fully analyse that at the moment, but it is a fairly significant candle as it's developing. But back to this candle that has finished trading, we have had a change of trend today. Prior to that, we saw the market trading down with a hammer type pattern and a candle where we saw the market test below the 93.86 important support level and be rejected strongly from there, with the buyers continuing control of the market. Today's trading establishment of that first time frame uptrend with the candle has made a higher high and a higher low. A couple of worrying factors about this. The first that we notice is the small body, and even though it is a white body, it is fairly small and much smaller than some of these black bodies that we've seen. The small body suggests that the buyers have made an amount of net bullish progress on the day between the open and the close, so that is a positive. But what we'd like to see is the body of the candle probably a little bit larger. The biggest worrying factor here is the large shadow on the top of this candle, on the top of this body, and we saw the market test to the 95.36 level that was previous support and is now acting today as resistance, and the market was strongly rejected from that area. The market also tested to the Tenkan-sen, the green line here, and was strongly rejected from there. And very often, as I mention quite often, that the Tenkan-sen, when we have a market that's trending to the downside very strongly, tends to be the first level of resistance. It tends to be solid resistance for this market on that first attempt. So very solid price rejection from there. And it is a level that we should be watching very closely moving forward. But yesterday I mentioned this zone of potential resistance from the 95.36 level extending through to the 95.81 level, and that is very, very solid resistance for this market, and does suggest that there is potential for this market to change the trend back to the downside. The other worrying factor here is that even though we've changed the trend to the upside and the buyers were strong enough to take out the previous high and they showed some strong commitment, even though they did lose commitment later in the trading day with this price rejection, we saw the market fell to or the market closed around the midpoint level, suggesting that the buyers failed to take control of this market by the close of trading. So while they were trading up around these higher levels, they had control, but they lost that control, and it's not the perfect type of candle that we want to see for establishment of a first time frame uptrend. The only positive factor here is that we have a white body, but the other factors do suggest that, and it's all about the weakness of the buyers in this market, it does suggest that there is potential for a change of trend. Now, the worrying factor here for the potential for change of trend is this solid support just down below where the market's trading at 93.86, and we saw the market fail to trade down through there 2 trading periods ago. Yesterday's trading we saw the market test below there and be rejected from there, so we do need to watch that very closely. If we do see a bearish close down below the 93.86 level, we could quickly see the market trading down to 92.21. In terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend to the previous time the market was trending up, and here today we've seen the market test exactly to the 100% level and be rejected from there on a fairly weak candle and not the type of candle that we want to see on establishment of an uptrend. It does suggest that there is good potential for a change of trend, so we should be watching the low of the current candle for a potential lower high and lower low. And in terms of the Fibonacci retracement of the prior downtrend, here today we've seen the market test to the 58% level through the 38.2% level, and we've been rejected from both of those levels, with the market failing to close above either. And this does suggest that there is good potential for a change of trend back to the downside, so let's be aware of that. And that would be in line with the market being in a second time frame downtrend, where we have the market making a series of lower peaks and lower troughs as we're trading down below the Ichimoku indicators. Now, in terms of Ichimoku, this market is still negative in the long-term time frame by trading down below the cloud. So we have a bearish market in a long-term time frame. We are trading a long way down below the cloud, so it does suggest there is potential for the market to find equilibrium, but the market is a long way away from there. So a bounce would not surprise, but certainly the short-term dynamics aren't favouring this market retracing any of this second time frame downtrend substantially. In terms of the Kijun-sen, the pink line here, we are trading down below there, so the market's bearish in the medium-term time frame. But that Kijun-sen has turned flat, and there is a possibility of the market trading back towards that flat Kijun-sen. So we should be watching this strong resistance overhead around the 95.36 to 95.81 area. If we do see a bullish close up above that area, we could see the market testing quickly to the 96.62 level and then potentially retracing back towards the flat Kijun-sen, but I doubt very much that that is going to happen. Looking at the Tenkan-sen as well, the market's trading down below there. We have been for quite some time, and the market has been rejected from there today, as I've already mentioned. So very, very strong resistance overhead around this area. The Chikou span is below the corresponding price action, so it's confirming the negativity that we're seeing in this market. So basically a market that's negative in all three time frames. We've attempted to rally on a fairly weak candle where the buyers have failed to take control. They have found some momentum in terms of net effect between the open and the close, but certainly a day that does suggest there is a possibility of a change of trend to the downside. We have very strong resistance overhead, solid support down below. The 93.86 level becomes very important. If we see a bearish close down below there, the market could quickly trade down to 92.21.